Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's look at what the Nifty is doing. A fifth of a percent higher where the Nifty is concerned. We're again in a very narrow band is what we're trading in. Just about 100 points is what the Nifty has traded in, high to low, and we're closer to the highs than the lows. We're at we've sustained above 26k at least for some part of today, if I can call it that. But we slipped to a low of 25,924. At the low point, as you can see on your screen. Let's talk about sectors, and the Nifty Bank has been surprisingly and well resilient, and it mirrors the Nifty in terms of the stock chart, at least today. We're again sitting at close to the day's highs, intraday highs, where the Nifty Bank is also concerned. Let's talk about the Nifty IT index, because that was the key area of support yesterday and day before yesterday. We've seen a bit of a slip up there. And what we're seeing, or rather last week as well as yesterday, and 0.5% lower is what we're seeing on the Nifty IT index. Now the constituent seeing some pain, and that seems to be reflecting on the index. Let's talk about some of those names. Infosys, Wipro, TCS, among the larger names, are all down 0.5% plus in trade, and that is reflecting on the index. Within the Nifty pack, some of the gainers, a BEL is doing very well for itself, 2% higher, and some of the defense counters again coming to the fore today. SBI is the other one which is doing well, silently climbing 1.8%. Hindalco doing well, Bajaj Auto, DRL are just some of the movers of today. DRL, mind you, getting authorization from the European Commission for one of its key drugs in osteoporosis, and that is the reason why you're seeing what you're seeing on a DRL up 1.5% in trade. Let's talk about on the broader end, at the broader end, what some of the indices are doing. The Nifty mid cap largely in line with the Nifty 50 index, and so is the Nifty small cap, but a flattish kind of move on the Nifty small cap index, and these have been relatively more resilient today than the Nifty 50 index. Especially the mid cap has been in the green for pretty much all of the day, and a better part of the day for the Nifty small cap as well. So those are some of the key trends which are playing out. Let's talk about two standout sectors today. The Nifty PSU Bank 1.3% higher. The Nifty Realty Index, that too is 1.3% higher. So those two doing very well in trade. The Nifty Metal also standing out 0.5% higher. Within the Realty pack, well, plenty of movers and good ones. Raymond 3.5% higher. Brigade is doing well, 3.5% as well on a Brigade. Anant Raj, Phoenix Mills, Prestige are just some of the others again which have stood out and done well in trade today. In fact, even the Nifty PSU banking pack, again, some good movers. Bank of Maharashtra up 2%. SBI, the large cap, contributing well to that index. So the Nifty PSU bank also doing fairly well for itself and in focus. Let's talk about some stocks which are doing well on the back of news. Transformers and Rectifiers India on the back of an order win, up nearly 6%. Apollo Micro is up 4%, again on the back of an order win coming through. Some of the defense names are doing well. I spoke about BEL being the top gainer on the Nifty, and even within the defense pack, that one is doing surprisingly well. Sobha is holding up fairly well for itself, and so is an Acme Solar on the back of that order win. Premier Explosives is the other one, and Zentech on the back of news, where both of those are also holding up well. In terms of key losers, Siemens Energy, from the bottom, it's obviously done okay. The gain from the low is around 2.5%, but it's still down 2.3% in intraday trade today. So, Siemens Energy is one of those. Eris Life on the back of that acquisition is down 1% as well. So those are just some of the other movers in trade. In terms of the breadth, and here is where it gets interesting. The breadth is largely even Steven. Despite the very flat move on the index. So that too is something that we'll keep our eye out on. But Kunal, the move on the index, what's your assessment of today? And can we build on to what we're seeing today? And what do you expect in terms of the expiry move? Actually, don't talk to me about whether we can build on this. Let's talk about the next 1.5 hours. What does the expiry move look like, at least today, in your opinion?
You know, it's a good, so good afternoon, Harsh.
Good afternoon.
I think it's a good day for the indices, and this indicates that the market participants are taking the November expiry or the end of the November expiry and the start of December expiry with a slight positive bias, because you don't see the markets being on tenterhooks like what they were yesterday and day before. You know, yesterday there was a lot of edgy kind of a price action. You saw the index succumbing back towards the 26,000 mark on the downside. We managed to break below those key support levels. Today the start was a little bit on the patchy side for the indices, but net we've still managed to hold on to that 26,000 levels for the index. The premiums for the index futures in the in the next month so far, I think have been at par, which means especially over the last compared to over the last couple of expiries. And the last couple of expiries, we've seen that the tone for the market has been on the bullish side. So that also gives maybe an indication that the market participants are going in with more long rollovers for index as well as for individual stocks. But I think what's the better highlight for the markets today is after 5 days of a negative market breadth, so far we are seeing the market breadth to be on the positive side. We have more stocks advancing as compared to declines. So that could probably be an indication that we are looking at some sort of a floor reaching for the overall market breadth. And the last point, which is very, very interesting, is we've not managed to break below the previous yesterday's low for the index. Had that happened, that could probably have invited more selling pressure. But we've managed to protect yesterday's low for the index. So that's, I believe, one of the reasons why I would believe that the market should see a swing back on the upside.
Okay, a swing back on the upside. Which sectors will lead that, in your opinion, Kunal?
See, strongly believe that banks have to play a very critical and a very pivotal role over here. So maintaining that stance that banking stocks in the banking index would be one of the more prominent and the formidable ones. The financial services pocket, X of banks, of course, we were discussing L&T Finance, AB Capital, etc. These stocks have done phenomenally well today. That's another pocket which I believe looks fairly attractive even at current levels. There is some sort of reprieve or respite coming back into the auto names. And that's the third formidable sector which is now making a comeback for itself. And remember, I think the entire rally started off in August, September on the back of the confidence which the markets exuded in the auto sector names. So these stocks making a comeback should have a very strong positive effect in the overall market sentiment. And then there are some traces of short covering which are emerging in the other underperforming sectors, whether it's pharma, whether it's realty, etc. So that could be other positive which the market should be taking forward.
Okay, some stocks which are buzzing, and Rabinder standing by with that list. Rabinder, what do you have on your list?
Whereas on the back of the order win, Zentek is in focus in today's trading session when company has received a domestic order worth of rupees 108 crore from the Ministry of Defence for supplier simulators, and the order to be executed within a year. Apart from this, Apollo Micro is also in focus on the back of the order win when company has received 2 orders worth rupees 27.3 crore. One order is from the DRDO of rupees 5.7 crore, and another order is from the private company worth of rupees 21.6 crore. Glenmark Pharma is also in focus, where a company has launched the world's first nebulized fixed dose triple therapy for the treatment of chronic obstructive pulmonary disease. On the back of CEO exit, Yatra Online is also in focus in today's trading session, where company CEO Dhruv Sringhi has resigned stating personal reason, and the resignation is effective from the 24th November 2025, and Siddhartha Gupta has been appointed as a new CEO from the 25th November. Shobha Limited is also in focus from the realty space, where as per reports, company has launched its first project in the Mumbai real estate market named Shobha Inzio. Acme Solar is also in focus, where Acme Solar has signed PPA with SECI for 200 megawatt solar with battery storage project. And some of the OMC stock is also in focus on the back of the investor has downgraded the stocks. For HPCL, investor has downgraded the stock to sell from the hold rating with target price rupees 425, and for BPCL they have downgraded the stock to sell from the hold rating and with target price rupees 330, and for IOCL they have downgraded the stock with target price rupees 145. Lupin is also in focus on the back of a note, where Jefferies has come out with a note on Lupin, and they have maintained the buy rating with target price rupees 2,300. They say that the FY26 US revenue is expected to exceed USD 1 billion, which is driven by new launches including Glucon and Ligrotide, and India business is expected to outperform industry by 200 to 300 basis points. And lastly, Reliance Industries is also in focus on the back of brokerage note, where JP Morgan has come out with a note, and they have maintained their overweight rating and high target price rupees 1725 as compared to earlier target price rupees 1695. So back of this, Reliance Industry is also in focus, and the stock is up approximately 1%.
Absolutely. Thank you for that, Rabinder. In fact, Reliance at the 52-week high, Kunal. What next for this one?
I think some distance away from 52-week high. Yeah, okay, 52-week high.
Yes.
But
because you have to exclude Jio from that, from the Reliance stock.
No, not the all-time high. All-time high is 1610.
Absolutely, exactly.
Yeah,
so 52-week high.
Yeah, 52-week high, but
Sure.
I think it's done reasonably well. It's
Okay.
been a silent performer. It's up, I think, around 13.5% in the last 2 months of this quarter. And prior to that, the stock was almost down 7-8%. So it was sub 1400 levels. Now it's at 1550 mark. And one of the prime reasons why the Nifty is finding its feet at this 26,000 mark, because it has support of these few very select large cap, heavyweight large cap names. Add to the fact you have L&T also displaying a admirable strength, I think at 4,000, 4,100 mark. Very good names, both Reliance as well as L&T, and I think Reliance specifically. I would aim for the stock to come back to new highs for itself. It could take some bit of more time because it's a very slow mover in terms of the price trends, and all of a sudden when you see a breakout happening for Reliance Industries, it gathers momentum. So we just need to wait for that breakout to happen for the stock. But yeah, life highs of 1600 plus could be due for the stock.
Okay, due, in fact, a life high of 1600 plus on a Reliance Industries. Kunal, the other one which is very close to a 52-week high with Nifty banking index is Federal Bank. It's done ever so well. We've seen a very strong rally, especially post the fundraise. What next for this one?
Yeah, it's been spectacular over the last 3 months. There's been a sea change in terms of the price trend for Federal Bank. 3 months back, the stock was sub 200. Now we are looking at the stock cruising at 250 plus mark. Third consecutive month where the stock has gained from the sub 200 levels to now 250 plus mark. This has been more like a dream run for Federal Bank, because I remember the stock hardly used to get into a zone where it goes into a 10%, 15% rally for consecutive months. But this could probably be the second better month for Federal Bank after the previous month where the stock moved from 190 to almost 230, 235 kind of a mark. So excellent stock in terms of chart as well as in terms of price momentum, and looks like that this momentum is here to sustain.
Interesting. So Federal Bank as well on that one. But Kunal, your picks for this afternoon?
So 2 buy calls. The first one which I would suggest would be Aban Bajaj Auto. We discussed this and I recommend this in the morning. The stock apparently has done reasonably well on a day like today. And now I think at 9,150 plus mark, would look out for a higher target of 9,350. So traders who are looking at a fresh buy could look at a buy at current levels with a revised stop loss at 9,000. And the second would be a buy in Industar. This could be a potential breakout candidate on the short to medium term charts. So stock taking support at a trend line base closer to 400 levels. So would look out for 440 as a positional target for Industar and stop loss at 385.
Okay, so those are targets for you, and what we'll do is we'll also slip into a very short break. But on the other side, we'll also start taking a fundamental view. We'll have Dhananjay Sinha joining us. Stay with us here on ET Now. Closing trades here on ET Now, and I have with me Dhananjay Sinha, CEO and co-head of equities at Systematics Group, to talk to us about his views of the market. Dhananjay, good afternoon, welcome. Let me start off, Dhananjay, by getting a sense from you as to what stood out for you with regard to Q2 and what could the upside surprises be for H2 FY26.
So I think as far as the Q2 numbers are concerned, if you look at Nifty numbers, it's basically a 6 to 5% handle on the sales growth. I think the companies have been trying to optimize on their cost on raw material, also on the spending on salary and compensation. So basically, a lot of that is happening to conserve the profit. But I would say it is still fairly lackluster. I think it's low single-digit growth as far as profits are concerned. I mean, there is also statistics which shows that the broader markets has done relatively better. But I would say that we'll need to see. It can't be that large companies are not performing well, whereas the broader context is somewhat more relatively better, because the economic cycle is virtually the same. I think what most of the corporates are guiding for is a better second half based on the rate cuts. As far as the RBI is concerned, they've front loaded a lot of rate easing, etc. And also that you had the GST reduction and the effect of the income tax rationalization that had happened earlier. So I think a lot of these companies, in terms of their commentaries, are showing a better outlook for the second half. So we'll need to see. So that is broadly the context. The markets are hoping for a significant recovery in earnings next year with an average expectation of about 14-15%. So I think this is how the market is positioned at this juncture. I would say that it's kind of somewhat more complicated than what is assumed. I think the expectation of a 15% odd growth is coming from a base effect which is weak, and also the fact that markets have been fairly lackluster. If you look at the overall index performance of benchmark indices, it has been fairly lackluster last year. So people do expect a better return performance next year. So I think that's how the market position is positioned at this juncture.
Dhananjay, if I were to stretch that timeline by maybe another year, so let's say FY27 finds favor because of the kind of tailwind in terms of growth that we're seeing. How should one look at FY28? And I say this in the backdrop of the fact that you could see a further 1 or 2 rate cuts on the anvil, which could spur growth and which could aid growth for the next couple of years. And therefore, I'm trying to understand whether you would believe that there is good enthusiasm for the next couple of years in terms of growth visibility on the earnings front. Is that something that you believe will likely happen?
So I think FY 2028 will be a long shot. I think people are uncertain in the near term itself. So I think if you look at what RBI seem to be doing is actually while they are easing the rate, etc., they are also they are also in the framework to reduce the restrictive regulatory mechanism that the banking sector is faced with, in the context that they fear that the conventional banking business is not really growing. So if you look at what the RBI governor said, the deputy governor said, and also Anand Nageshwaran, the chief economic advisor for India, in the finance minister, they're all together saying that for the conventional banking business, there is a issue in terms of growth, and hence if you reduce the regulatory structure, they might actually grow. And there is also a sense that they should be allowed into M&A activities, decide on their loan to value ratios based on their own risk assessment. So all these things are something that the regulators and government is trying to do. So I think they are trying to use the banking system to spur growth going forward. The problem, I would say, is not regulatory. It is more about the deposit growth. So if you look at the deposit growth, has been hovering around 9% odd. And I would say over the last several years, it's been in the region of 9 to 10%. So unless you have a deposit growth which sort of moves up, and with the credit deposit ratio at peak levels, you can't really trigger more credit growth and more leverage spending by households. Households are already leveraged quite a bit. So I would say that while the regulatory easing might be a constructive situation, what actually is required is a greater sense on whether household income is rising, with that the savings and deposit growth, etc. So that is one part of it. I would say, as far as tax reduction is concerned, I would say that is still a modest stimulus, and we'll need to see more of that. So that is another thing. And third thing is the trade bit, which is also quite uncertain. We have seen that while there was clustering of global trade in the initial quarters of 2025, because of clustered imports by US, etc., ahead of the US tarification, that has started to come off. So I think that global thing is not very favorable, and I would say Indian markets will largely be more domestic oriented. So I would say, all put together, it's going to be a fairly nuanced context rather than a one-way inflection that market is anticipating over the next 12 odd months.
Okay, we'll take a pause on this conversation and move on to an ET Now exclusive. The government is making changes to the PLI scheme for advanced chemistry cell battery storage. This is in order to maximize bidder participation. Prakash Priyadarshi joins us with all of the details on this one. Prakash, what can you tell us about this?
We're learning that the government has made changes to the PLI scheme for ACC battery storage, a very significant development coming in. In fact, changes have been made for bidding of 10 gigawatt hour capacity for grid-scale stationary storage. sources still is that the key changes have been made based on recommendations of the Ministry of New and Renewable Energy to maximize bidder participation. And the significant part is that these recommendations have been approved by the empowered group of secretaries on a PLI scheme. According to the proposal approved by the empowered group of secretaries, maximum and minimum capacity per bidder for stationary storage reduced to 4 gigawatt hour from 20 gigawatt and 1 gigawatt hour from 5 gigawatt hour respectively. Similarly, the approved end of life capacity for calculation of cycle life has been reduced to 75% from 80% of initial capacity. In addition to that, energy density replaced with energy efficiency in the features of a testing framework. These are key changes which have been made to the policy, to the PLI policy for SEC battery storage on the recommendations of Ministry of New and Renewable Energy. And the significant part is that these recommendations have been approved by the empowered group secretaries on PLI scheme. You are aware that the ACC PLI scheme was announced in 2021 with an outlay of rupees 18,000 crore, where government targets building 50 gigawatt hour of domestic battery cell capacity under this scheme.
All right, thank you so much for that, Prakash. That's one part of the story. The other part is Grow, and let's pull out that stock. Let's see what that one is doing. Good earnings for quarter that Grow has declared, and the company expanded because of its the revenue expanded on a QOQ basis. Let's listen into what Ishan Bansal, the co-founder and CFO, had to say about the revenue guidance of the company as well as the future roadmap. We'll also slip into a break. On the other side, we'll come back and take and try to analyze those numbers a little bit better. Stay with us. Welcome. Thanks for staying with us here on ET Now. This is Closing Trades, and let's talk about some movers in the day today. You know, Kunal, within the Nifty 50 pack, there are quite a few movers. Let's talk about a couple of them. And among the top, at least the gainers today is a Hindalco. And the metals pack is moving very smartly. It's also the defense stocks which are doing well today. Any call with regard to a Hindalco, a BEL?
Yeah, I think Hindalco could be an interesting bet. The stock seems to have formed a double, bottom support, the 775, 780 range. I think yesterday as well as a couple of weeks back, the stock managed to test this, support territory, and from there it seems to be taking some good support. So this bounce back, I think for Hindalco should take the stock back towards 800, 820 range over the near term. So I'm expecting at least another couple of percentage points up move over the next couple of days for the stock. Even BEL, I think on the short-term charts, we were discussing, this some time back also, that it's one of the most stronger names from the defense pack. No formidable ones. Still trading, about the key support levels on the short to medium-term charts. In fact, the stock is trading about the 400, 410 odd range, which is a good support for BEL over the near term. So the view remains positive for BEL, being one of the stronger names from the defense pack. And for Hindalco, I would expect the stock to head towards at least 800 to 820 range over the near term.
And what do you make of an SBI, Kunal?
I think SBI has been fabulous altogether. Throughout the day, the stock had showed those initial signs of leadership. When the stock moved to higher from 970, 967, which is the close yesterday, towards 980, 985 kind of a zone. I think it's been a very strong move for SBI. Now, we just need to differentiate that whether this could be an expiry-led move, that traders are carrying forward positions for SBI over to the next series. Maybe the move is because of that. So maybe over the next couple of days, we'll probably get a better hang that whether this was just an expiry day move for SBI after such a kind of a tepid performance from the bank Nifty in the last couple of days, or whether there's more meat ahead in the near term.
Okay. All right. Dhananjay, just a quick question. With regard to PSU banks, are you positive, negative, and specifically SBI? Do you expect it to outperform the private banking pack?
So I think we had a recent theme about PSU banks. I think we were sort of favorable. We had a favorable view on that.
Sorry,
and I think a lot of these,
SBI,
BOB, etc., were there figuring with a good return. But I think the performance has been pretty good. I think valuations were attractive and some of the headwinds were seen coming off. So I think there has been a good performance out there. I think in the recent times, there has been a correction in the banking sector as a whole. Largely to do with the fact that there has, first of all, there was a run-up, and secondly, the rupee had actually been weakening. So I think there is a inverse correlation between the rupee value and the Nifty and the PSU banks in particular. So if the rupee weakens furthermore, there can be a certain tail. There can be certain headwinds for the valuations for the banking PSU banks in particular. So I would say that our view is more in favor of favor of consumption names, auto names, and defense. You discussed some stocks out there, and metals as well. So I think some of these rotational bets can be seen in the near future.
Okay, interesting. I'll come to some of those names, Dhananjay, but today the stock in focus is Siemens Energy among all of the others which are moving. It's under pressure. Margins for the fourth quarter miss street estimates. Kanishka Sarkar joins us with the highlights of those numbers.
That's right. So Siemens Energy is in focus today. In fact, during the day, in the initial part of the trading session, we saw gains of about 4%, but now the stock seems to have flipped and currently trading about 2.5% lower over there. And just to take you through those numbers, first up, what drove the move for the fourth quarter of 2025 for Siemens Energy? Revenue came in pretty strong at that 2,646 crore rupees level. That's a jump of about 27% on a year-on-year basis, which was a clear beat. Net profit rose 31%, broadly in line, whereas margins, they saw a slip. EBITDA margin came in at 18.1%, which was slightly above last year, but still seen as a miss versus the expectations. Now, just to take you through what happened with the margins, why did we see a decline or a miss as far as margins are concerned? Some of the cost lines, they rose very sharply. Project bought outs and direct expenses, they jumped about 35% on a year-on-year basis. Finance costs jumped about 200%, and depreciation costs, that also climbed 64%. So that's some of the key reasons that look like that they have impacted the margins. However, initially we did see a jump up in the stocks, and despite all of this margin volatility that we have seen, order visibility, that remains strong. Order backlog stands at 16,200 crore rupees. That's up 47% on a year-on-year basis. New orders were also steady, not a huge jump up over there, just about a percent jump up in terms of new orders, coming in at 2,351 rupees. Management commentary, that was also upbeat. They said that they are maintaining the strong momentum that they saw in the previous year. So yes, that's about the management commentary as well. Pretty upbeat, but margin is something that was hit on the back of few cost lines. So yes, we did see a jump up in the stock on the back of mixed but largely strong results. But now the stock seems to be witnessing some kind of profit booking, and hence has given up all of those morning gains.
Okay, so that's the take coming in from Kanishka on Siemens Energy. Thank you so much for that. Rudramurthy BV is joining us, founder, director at Vachana Investment at this hour. Rudra, I'll come to you in just a couple of minutes. First, Kunal, on to you. With regard to some of the new age tech names, Swiggy, Eternal, and the likes, anything that's standing out for you at this point? Anything which is looking attractive?
See, these stocks are forming a base for themselves, bottoming out after a 20% kind of a correction broadly. So, for example, Swiggy was almost at 465, 470, a couple of weeks back, or maybe 3-4 weeks back, and the stock has now come back towards 380, 85, which is the low the stock had made in the last 1 week of this price correction. So it's almost broadly like a 20% correction. Eternal, erstwhile Zomato, I think that stock also, I think from 360 odd levels had come back towards 300 mark or sub 300 levels. So again, a decent 20% correction over here. Both of these stocks are now trying to form a base over here at current levels. I believe that there will be more of a time-wise consolidation over here for both of these stocks, at least over the near term, and dips in that regard should be taken as buying opportunity. Ideally, I would believe maybe say closer to 280, 285 odd for Eternal, or closer to 365, 375 range for Swiggy. These could be good ranges if these stocks happen to test the range in this leg of price and time-wise consolidation. That's a good enough territory for traders who are looking at a contra buy on the stock.
Interesting. Dhananjay, if I can ask you, within the power pack, is there something that you prefer, especially given the fact that Siemens Energy's numbers were out? They were healthy, but below street estimates is what Kanishka tells us. What's your take?
So I think power sector as a whole has seen a good traction recently with good order book and the traction remains pretty good. So I think a lot of these power equipment manufacturers are actually showing a good tailwind. So I think the whole sector appears to be in a positive zone at this juncture. So I think within the capital goods, this is largely been showing a good trend. I would say it is significantly driven uh, by government spending, also the private sector capex that is happening on the power side. All of that is actually having an impact on the companies that are in the sector. Of course, there is a lot of these non-conventional energy, solar energy names that I like. So I think this is one segment which is actually preferred in my overall scheme of things.
Okay. Rudra, hi, good afternoon. With regard to the power space, any names that catch your eye on charts?
See, if I have to go for the erstwhile stocks like, for example, NTPC or even for that matter, Power Grid. So some of these stocks, especially from the PSU basket, if you see they're at their very close, strong support areas. So for example, if you see Power Grid, so for me, yes, at levels closer to 270, 265, it's a good entry point. But however, you are seeing a lower top lower bottom kind of a formation in chart, and now they're coming to their strong long-term support zones. So similar chart patterns are also visible if you see NTPC for that matter. Yes, it is at that strong support area of around 320 315 zone. So as a trader, I will definitely avoid them. But yes, if you want to build a long-term portfolio, I will still stick to stocks like either NTPC or for that matter Power Grid, and they're at their long, strong support areas. Only for long-term investment, you can definitely look at NTPC and Power Grid. For a very short-term kind of a trader, and if you are looking for momentum, this is definitely not a sector to be in. And even if you see Tata Power for that matter, even that is also showing a clear signal of falling top, falling bottom formation from levels closer to 410. Stock has now corrected till 380 level. The next strong support for this stock comes only at around 360-65 zone. So wait for this move on Tata Power to come to those levels and then look at buying, or else for short-term trading, clear avoid on this sector.
Dhananjay, hi, afternoon. You were talking about as to how you're still positive on the entire defense pack. But the valuations don't give you comfort to even add positions or buy afresh right now. What within defense is still looking like a value buy to you?
So I think the reason, we have been positive about the defense sector over the last couple of years, and I think in the context that there are geopolitical tensions and the preparedness that India has actually been moving towards is something that has been a tailwind for the sector. Also, the fact that India has emerged pretty strongly on the defense export side is also giving a tailwind. So I think what I basically am looking at is a traction in terms of overall order book and the sales growth. So I think there is a ramp up as far as the valuations are concerned. I think if you look at the growth numbers, I think it is justifiable in the context also that many of the other sectors are showing lackluster growth. So I think the reason why we have valuation premium is largely because of the certainty of growth. So I think market is really pricing that in. So I would say recently there has been a correction in the defense stocks. I think those can translate into buying opportunities. So we HAL and BEL are in our portfolio. So these are the two stocks that we have been looking at. Yeah.
Right. Okay. Let's take a very quick break. I just want to revisit what the markets as well have settled in at. While it's been one of those very range-bound trading sessions so far, right now we are just about, trying to pick up once again. 25,964 is where we're currently at for the Nifty spot. We'll track some of the individual stocks, but on the other side of this break. We're coming to you live from the SBI Live studios, and you're watching ET Now. Well, just largely quiet. We've been ambling around in a very, very narrow, range for the better part of today's trading session. Those jagged edges don't really mean anything. It's been a very narrow move from the high to the session lows. Hindalco, BEL, SBI, Bharti, Reliance, they're your big contributors to today's move. And on the flip side, IT is easing off a little bit. Infosys down 1.6%, TCS, ICICI Bank, Interglobe Aviation, Kotak Bank, HDFC Bank. So it's a bit of a tug of war out there. Similar is the picture actually within the broader end of the market as well. It's pretty even, Stephen. The advanced decline hands, at least within the F&O pool. So while AB Capital is holding up 4%, Adani Enterprises is down 2.5%, Paytm is down 2.25%, IIFL is up 3.5%. HPCL down 2%, KPIT Technologies reversing its move from yesterday, down 2% today. But Godrej Consumer Products, Federal Bank, Phoenix Limited, they are the ones which are propping up in trade. We're still in conversation with our panel of experts, but Kunal, just wanted to get your sense in on the health of the broader market. And we were chatting about this, I think, day before or yesterday morning as well, as to whether, or rather the trend which has already been prevalent, wherein money is moving out of small and mid caps and finding its way into large caps. Could that trend get more pronounced as days pass by?
Yeah, it should get more pronounced. The only silver lining today, which we were discussing earlier, is that after 5 or 6 days of negative market breadth, so far the market breadth for the first day is positive. Now going into any expiry day and the start of the fresh expiry, when you have such kind of a positive market breadth, it generally indicates that the market sentiment is not as negative, and there could be a hope that maybe the mid caps could also try and make a comeback. Of course, very select few mid cap names. What matters over here, and something which has been missing over the last couple of months, is the lack of follow through for so many mid cap and small cap names. It's not as if that these stocks had not seen any major kind of an uptick. You've seen broadly a 10%, 15% spike into many of these stocks from their previous swing lows in the last 1 or 2 months. But it's just that there has hardly been any follow through for majority of the stocks, and most of them have actually gone back and retested the previous swing lows, even after that kind of a sharp volume as well as price spike. So the lack of follow through price action is something which has been missing into the mid caps and small caps. That's one of the reasons why I believe that the markets have still going into a bit of a selling pressure over here. But yeah, it all matters that if the market, if the indices go into a stable uptrend, confidence eventually comes back again. And once the confidence comes back, you will see the mid caps and the small caps also start to perform.
Very interesting. Okay. Dhananjay, at this juncture, how are you viewing valuations?
So I think if you look at the valuations for Nifty is somewhere around 22.5 times on a trailing basis, and the expectation on growth is about consensus about 13 to 14%. I think that's pretty steep. I would say that for the trailing earnings that we are seeing averaging roughly about 5 or 6%, I think the relative valuation is on a PEG basis is relatively high. And in our matrix of 25 odd global indices, it is on the higher side if you consider the risk-free rate and the return ratios and all other matrices that we look at. So I think it is on the higher side. I would say that if you look at last couple of years, it has hovered around 21 to 23 times with a median around 21, 20, 22 times or thereabout. I would say this is significantly lesser than what it was pre-COVID at 26 times or so. So clearly there is an impact of global risk-free rate, which has been on a higher side in the recent times. So compared to the pre-COVID level. So I would say the buoyancy as far as the valuations are concerned isn't that much. I would say even though on a relative basis our valuations is on a higher side if you consider.
Okay. All right. Rudra, do you have a view on where we are, where the Nifty is concerned? What are the levels you're looking at? We didn't take stock of that, or your view on that. Of course, expiry day today, and we're seeing a bit of a move already on the index. So one, your call for today, and then in the near term, what's the opportunity looking like?
See, if you see the open interest built up and even the monthly expiry options which are there, yes, 25,900 and 25,950 will be the broad range. We have another 35 minutes to go for expiry. So I feel this range should be held, and markets have been, for today at least, Nifty holding this range, and it's a very tight range of about 120 points what you have seen. So for today I feel 25,900 has to hold, and whatever grind we have seen for last 3-4 days, yes, somewhere closer to the 25,800 we have to hold support, and you have to be very stock specific in this market. Look at, for example, private banks, especially tier 2, tier 3 private banks. Look at RBL Bank for that matter, Federal Bank, they're all very strong. Also Indus India Bank for that matter. Similarly, if you see NBFCs, look at Shriram Finance, look at Chola Finance, they're all very, very strong. So even in a bad market, these stocks are very strong. These sectors are relatively outperforming. So I will still stay with NBFCs like Chola Finance, Shriram Finance. Look at second tier banks like your Federal Bank, Indus India Bank, they're all very strong. So you have to be sector specific and stock specific in this market, and avoid mid and small cap in general. Let some amount of momentum come in there, and then one can enter into. Don't catch the falling knife, especially in mid and small cap right now.
Okay, hold on to that thought, Rudra. Lots more to talk about, but Dhananjay, we'll let you go on that note. Thanks as always for your time. Let's now focus on the Adani group of stocks, how the companies have fared in the first half of the fiscal. Kanishka is here with more insight on the same.
Very strong results from the conglomerate in the first half of the fiscal. In fact, they've recorded a record capex in the first half that's come in at 67,870 crore rupees, and that takes its asset base to 6.77 lakh crore rupees. So very strong record capex over here. Other than that, their EBITDA that has surged to 47,375 crore rupees, whereas the trailing 12-month EBITDA that's up about 11% to that 92,943 crore rupees. So yes, very strong moves over there. Now the big driver is the strength of the core businesses. That is 83% of the earnings are now coming from utilities, transport and infrastructure. That's supported by strong credit quality, with 90% of the EBITDA that's from AA rated assets and above. The leverage that remains low at 3 times, while the ROA that stands at about 15.1%. Now the group is also progressing well on its 1.5 lakh crore capex plan that they have for FY26, with the Navi Mumbai airport now already inaugurated. Other than that, across verticals, momentum remains strong. Adani Green, its capacity has grown by 49% on a year-on-year basis. Adani Ports saw an 11% growth in cargo volumes, and Adani Cement delivered a 38% EBITDA growth. Company has also highlighted higher solar and wind equipment sales at Adani Enterprises, new transmission wins at Adani Solutions, expanded PPAs at Adani Power, strong terminal performance at Adani Ports, and rising capacities at Ambuja Siemens as well. So overall, a very strong performance is what we have seen from the Adani Group companies in the first half of this fiscal.
Okay, thank you for breaking that down for us, Kanishka. But what we'll also do is we'll slip into a very short break. On the other side, we'll continue to talk stocks.
Trades right here on ET now, and still just about ambling very, very in a narrow band. So range bound recession. Hindalco looking good. BEL, SBI holding up well. Bharti's back in the green, and yes, Reliance has managed to clock in a fresh 52-week high for itself. 1544 on the stock right now. Tata Motors, PV, ICICI Bank, HDFC Bank, Kotak, they're all taking a step back, and TCS Infosys as well, lying a little lackluster today. Both those stocks are also down. Amrish Baliga as well joins in on the show right now to talk about what he's making of the market. Amrish, just looking at the market texture, continues to be range bound. What's the next trigger point for the market? Would it be the India-US trade deal, or would it have to be the earnings?
No, I mean, we expect the India-US trade treaty to happen soon. I mean, we were expecting it by end of November, but now it seems could be sometime in early December. I think that should be the one big trigger for the markets to again try to move up and move beyond the all-time highs. And I think that's the time the major pain in the market, which is there in the mid cap and the small caps, I think they are the ones which will finally start, outperforming at that point of time. Because today, despite the markets being close to the earlier high, we are seeing that most of the portfolios are bleeding. And because of that, there is a fear that liquidity can become less going ahead in case this thing continues. But my feel is that the trigger would be the US-India trade treaty, and because of which we could see most of the stocks bouncing back. So I would take this as a buying opportunity, especially in the small cap and caps. Again, one has to be selective. One should not be buying just because they have fallen. I mean, buy the stocks where you have confidence, and I mean, you clearly know that I mean, these stocks are undervalued at this point of time.
Okay, while the India-US trade deal still is a question mark, but after months of tough negotiations, India and the European Union trade deal is finally inching closer to reality. India and the EU are expected to finalize a free trade pact and a defense framework agreement and a strategic agenda at their annual summit on January 27th. In fact, EU is India's second largest export market after the US, and this development comes in even as trade deal with Trump administration hangs in balance. Let me take it across to my colleague Sumita Karir and get in more on the India-EU trade agreement.
So remember the India-EU deal that has been one of the big priorities of not just the Indian administration but the EU administration as we've heard. EU Commission Chief Ursula von der Leyen said on several occasions that trade with India is a priority. Economic and bilateral ties with India are a priority for the EU. Remember, because it's not just one or two countries. The whole world has been disrupted by Donald Trump's tariffs. And of course, these geopolitical disruptions have impacted EU as well. And EU is looking at India as a trusted geography for trade, for economic partnerships as well, given the fact that India is a geography which has seen consistent growth, consistent GDP growth. We have a big domestic dividend as well. So definitely this is an important priority for the European Union. And earlier this year, when the leaders of both the geographies met, EU and India, they decided that we will be looking at finalization of a free trade agreement by the end of this year. Now, as far as the free trade agreement is concerned, we're given to understand that at least 10 to 12 of the matters, chapters have found convergence, so whether it's related to agriculture, non-agricultural products. And then, of course, there are some contentious issues, roadblocks, essentially, that have emerged in the past few months. CBAM has been one of the key issues as far as this particular pact is concerned. In fact, a couple of months back when talks were on in their initial stages, there was also, a proposal that perhaps we could look at CBAM as a parallel engagement and not as part of this FTA. But we're given, but we need to wait for that sort of clarity to come in. Other than that, steel and auto sectors, they have also remained some of the more difficult issues. But overall convergence has been achieved in 10 to 12 chapters. There are some pending chapters that are pertaining. In November, also we did see the trade team come to India for these negotiations. And of course, we were told back then that EU wants reduction in tax on products like wine, spirits, meat. And of course, CBAM was discussed at length. However, India has put its strong position as far as the CBAM issue is concerned. So definitely all eyes are on late January. And of course, all the developments pertaining to this particular FTA.
Okay, thank you for bringing us that, Sumita. Amrish, auto, is that at all something that you're liking in this environment? And also, what within the auto pack are you liking?
In fact, auto I've been liking for a while, and especially post the GST reduction and the sort of numbers which we are seeing, I think will continue at least for a while longer. When I say a while longer, I see that continuing at least for the next quarter or two. And among the auto pack, I clearly like the PVs, especially at the lower end, because of which I would look at Maruti, even at the current levels, and two-wheelers, which is Hero MotoCorp and TVS.
Okay. Kunal, any preferences within the auto pack for you?
Yeah, I think now if you look at of Bajaj Auto making a comeback, Hero MotoCorp I think has been looking very fabulous over the last 3-4 months. Specifically, I think 6,200-ish. There was a high for Hero MotoCorp in 2024. The stock had fallen down to as much as 30-35% in the first phase of the correction. But now the stock has managed to come back again and recover from those 6,200 levels to now almost on the verge of breaking past above the previous highs. You've already seen the likes of Eicher Motors, M&M, Maruti, etc., which have done reasonably well. Ashok Leyland is something which has been very consistent. The stock, I think, is now on the verge of a breakout of yet another psychological break of 150 mark. So that could be interesting, pick over the near term. But I also believe that the indicators for Tata Motors PV are now coming into a bit of an oversold territory. We are at a point where closer to 340, 350 mark for Tata Motors PV, the stock which has been a huge underperformer, I think can also start to see some bit of more respite. So my sense is that we are looking at a broad-based rally across the auto packs, right from the likes of performers like Maruti, M&M, etc., even potentially to underperforming zones and underperforming stocks like Tata Motors PV.
Okay, Suntec, that's the one stock which is in focus, Suntec Realty that is. They've received an order from the London Court of International Arbitration confirming the withdrawal of one of the claims and termination of arbitration with its JV, which was to build this ultra-luxury project of pipeline of projects, that is, and enter into the Dubai real estate market. Ambarish, Realty as a pack has been underperforming the last 1 month. And given that every homegrown player is becoming a pan-India player right now, we can see with the kind of move that we're having with all the regional players now entering the Mumbai market, for instance. I'm going to keep Suntec out of this equation. But other than that, what's the Realty name that you're liking at this juncture? No,
in fact, I mean, we should again start seeing a decent move in the reality space. I mean, we had seen some amount of slowdown, again, because of extended monsoons also. But I mean, what we see now is sales is actually again picking up. And if you're talking of the Mumbai reality, I think clearly the action is more on the Navi Mumbai side, closer to the new airport. And from that point of view, I would surely look at something like a Godrej Properties. And among the smaller ones, which is specifically for Navi Mumbai, is Arihant Superstructures.
What about you, Kunal? Do you like the Realty pack, and what within the Realty pack do you like?
So not really as of now would go for a contraband real estate names or realty names, but maybe I think over the next 1 week or so, I would sense that many of the indicators would start to become a little bit more oversold. We've seen a huge underperformance for the Nifty Realty Index. We were discussing this in the morning that I think closer to or sub 850, 840 thereabout, for the Nifty Realty Index could be a good zone where traders could look at a contra buy.
Amrish, what about IT? Today, of course, some of these names are taking a breather, but the way IT has actually moved this past 1 month, convinced about the fundamentals just yet?
I mean, I would still wait for possibly a quarter more. And more than the performance, I would again wait for the management commentary. Post that, maybe one should take a call. I think the move which we saw in the last 2-3 days was basically because the rupee had weakened beyond 89, and I think that's what has played out. But then it's better to wait at least for a quarter more for the earnings and the commentary.
Some big movers within defense, and Rudra, I wonder if you have a view. Apollo Micro, you also have a BEL, which is doing fairly well for itself. A Zentech is also perked up on the back of an order win, and so is Premier Explosives. Some of these orders coming in thick and fast, and therefore on the fundamental side in focus. Rudra, on technicals, do you like any of these?
Definitely, yes. Apollo Micro looks very strong on the chart. You have already seen a profit booking in this stock from levels closer to that 340-45 zone. Stock has already corrected to the base, and now the support is at around 250 zone. So at current market price and on declines to 260-65 zone, I will be a buyer definitely on Apollo Micro. Keep a tight stop loss of 250, and it should go back to those levels of 340-350 soon. So that is a definite buy. And if you want to pick a stock which is also in F&O and you want to have a larger cap stock kind of a thing, yes, definitely BEL looks much better to me, and stock is also available in futures. So one can definitely go long in BEL. Tight support for this stock is around 400 levels. So at current market price, if you are buying BEL, keep a strict stop loss of 400 and expect levels of around 430 to come initially. And once it breaks that 430-435 zone, which has been a strong resistance, yes, then stock can move towards that 480-500 kind of a zone. So BEL from large cap and in futures if you want to buy, and if you want to take an equity call, yes, Apollo Micro looks good.
Ex-MFI head of HDFC Bank, Mr. Venkatesh Krishnan, has joined Spandana. And as a result of that, let's pull out that stock. The stock of Spandana seems to have seen a bit of a spurt. So you're seeing good traction there. Let me come to you, Amrish. Some of these MFI plays, are these at the cusp of a turnaround in terms of asset quality? One, is that what you're sensing, and therefore would they be a good buy at this point, given that we're probably somewhere late in the cycle, and the cycle could turn.
Right. Yeah, in fact, I mean, the last 2 years were, I think, one of the worst periods for most of these microfinance companies. And we have seen a decent amount of cleanup also happening. And when we're talking about now, yes, with the new CEO, I think things should turn around.
Okay, that's the take coming in right now on Spandana Spurti. In the meantime, just looking at some of the other active participants, Paytm, let's bring up that stock price up for you. 2.25% lower in today's trading session. But let's just try and bring up the year-to-date chart. It's been quite the turnaround and the revival story. Can it really push up further from these levels is the big question. It's a 21% notch up that you've already seen in 197 communications of Paytm. Kunal, what are the charts reading like?
Yeah, it's been a class outperformer over the last few months. You know, the stock moving initially towards 1350 mark, which was the recent high for Paytm, and now it's this is the one of the few months where the stock has gone through a mild correction from the intra-month highs. We need to see whether the stock is able to break past over the 1350 levels or not, because over the last I think 6 or 7 months consecutively, the stock has been making new highs for itself, and whenever it does, the stock has managed to, at least on an intra-month basis, have shown good performance for itself. So the breakout point for Paytm yet again could be the 1350 mark.
Okay, the breakout point once again could be 1350. Let's take a look at Reliance as well, and that has been chugging along very nicely. Rudra, let's get in your take on the charts. Comfortable finally above that, well above the 1500 price point. What do you read on the charts for Reliance Industries next?
See, in fact, there are many people who will just see the Nifty levels and say that, okay, market is so strong, but definitely there is so much of pain in mid and small cap and in broader market. And Nifty is holding strong again only because of Reliance, which is the major contributory in terms of the market cap. So if you see Reliance, yes, from levels closer to that 1375, from where we have seen this move, and now if we cross this zone of around 1550, yes, further up move can be seen in Reliance. And I'm seeing the chart pattern and the accumulations which are happening around, indicators suggesting very clearly that yes, it can close above 1550 very shortly, and any dip in this stock to levels closer to 1500, 510 will be a good entry point. Those who have Reliance, hold on, and if you want to buy it post that 1550 resistance is taken off, then if you buy, yes, more momentum to come, and every dips to levels closer to the 1500, 510 zone will be a clear buy on Reliance.
Okay, that's the take coming in. Reliance Industries holding up well above the 1500 mark, and it's been quite a struggle for Reliance. The outperformance in Reliance amidst the large caps has really sort of come out pretty late in the cycle, one would say. Finally playing catch up, and it's the one which is contributing to the index today as we speak right now. In fact, that said, just wanted to get your sense in as well on Reliance right now, Ambarish, and I can see quite a few brokerages finally turning their buy on Reliance. You've got Morgan Stanley, they've even upped the target price now to 1700 plus levels.
Yeah, in fact, if you see the last few days, there was some pressure basically because of the Reliance ONGC issue which had come to fore. But since then, now there's a talk of the Geo platform IPO by March 2026. I think that's what is pushing up Reliance today. But if you're talking of the near future, at least the next 1 or 2 quarters, I clearly see the refining margins moving up still further. And I think that's what should improve the margins for Reliance overall.
Okay. Some of the larger banks seeing some pressure, especially in HDFC Bank, now sinking 1%. Rudra, your take with regard to HDFC Bank on charts, is this an opportunity, this expiry day move, if at all you can call it that?
See, for me, there is sideways chart on HDFC Bank. On the lower end, yes, around 975, 980, you have support for the stock. And again, if you see the higher part of the range, 1020 is a hurdle. So it is just tightly trading in this range of around 975 on the lower side to 1020 on the higher side. So let it give a break either above 1020 or let it come to those support zones of 975 where it's a good buy. In between the range, I just definitely want to avoid taking any trade at current market price on HDFC. But look at charts of Indus India Bank. So for me, that's a very, very strong chart. Stock has already corrected from levels closer to that 890 zone, and it is now making a cup and handle formation, and you have a very strong base at around 825. So at current market price, it's a mouth-watering buy. Keep a tight stop loss of 825 on closing basis and look at targets of 890, 900 to come on Indus India Bank, a good risk reward trade from current market price. So Indus India Bank is much better to me if you want to stay with a kind of a larger private bank compared to HDFC Bank. I will still go with Indus India Bank.
What's your take, Ambrish, within the larger private sector banks? Do you like any?
In fact, I mean, I like ICICI as well as Axis, but I think at least in the like immediate future, in the sense the next 3 or 4 months, we could see some action in IndusInd Bank. Again, just like Spandana, I mean, we have seen a change of guard at IndusInd. Most of the cleaning up work has been done. So I think over the next 1 or 2 quarters, we should see a decent move up in IndusInd. I mean, I'll not be surprised if we see levels of 1,050, 1,100 for the stock.
I don't understand. Materially higher levels is what at least Ambrish is seeing on the charts. But Kunal, what about ICICI Bank and HDFC Bank? While HDFC Bank finally, along with Reliance, made a good attempt last week, scaled back above the 1,000-odd level. Do you see leadership changing hands, or have they already changed hands to PSBs now and out of private banks?
Yeah, I think for now that move is there. But, you know, we're getting to a zone where the move is getting a little bit more pronounced towards the PSU banking names, which have performed very well. Private sector banking stocks have underperformed consecutively for the last 3 months with respect to the PSU banking stocks. And the likes of ICICI Bank, HDFC Bank, etc., these stocks have struggled. So the large cap private sector banking stocks clearly have been huge underperformers with respect to the PSBs. But then I think you know, there would be a point where the PSU banking stocks would get a little bit more frothy on the short-term charts, and the private sector banking names would come back into a deep oversold territory for themselves. So we'll wait out for that point to happen for the call to you know, change, because that's where you would probably get a little bit more you know, price momentum as well as in terms of the private sector banking stocks.
Okay, you know, just some of the other movers in trade, transformers and rectifiers doing very well. Rudra, do you have a view with regard to this one? It's been a choppy chart, to be honest.
Very difficult to just comment based on the chart, but if you see, it is just definitely falling one side. And for me, the last support for this stock for near term is somewhere closer to that level of 280. So if you are buying at current market price, you have to keep a strict stop loss of 280. And if it has to bounce, it has to bounce from these areas only. Or else I will still avoid buying it at current market price. Let it cross at least levels closer to 320, 330 zone, show some kind of a strength or momentum, or else definitely I will avoid. If someone has it with them, you have to keep a tight stop loss of 280 for the long call on transformer and rectifier.
And Ambrish, this BLS International, do you like a story like that? It's a differentiated kind of story. They won an international contract with Embassy of Cyprus for visa outsourcing services, and they do this on a regular basis, try to win such contracts. Is this an interesting story to play? And if at all you've looked at it, are valuations reasonable?
No, in fact, I have not tracked this stock very closely, so it's a bit difficult for me to really comment on that.
That's Kunal that you're spotting.
Not really, I don't track it, so Harsh, I'll skip this.
Okay, so well, that's the take with regard to BLS. Well, nothing really coming through. Let's in fact again switch focus. We've got obviously a few banks which we are speaking about. Kunal, within the private banking pack, what are your preferences?
So amongst the private sector banking names, I would look at in the likes of Axis Bank as maybe a preferred bet, you know, because the stock has been relatively more strong with respect to the peers. But the focus, I think, should be on the mid-cap end of the private sector banking names, where the trend has been a lot more stronger. You know, the likes of Federal Bank, which we were discussing earlier, whether you look at AU Small Finance Bank, RBL Bank, as well as IDFC First Bank. These are the ones which have been relatively far more stronger with respect to their larger cap peers.
Just looking at Apollo Hospitals, they've opened a new 400-bed quaternary care facility in Pune. So that, of course, is one stock which has also been in focus. But you know, the fact that Apollo Hospitals is a little soft today is immaterial. Look at the way Apollo Hospitals has performed in the last 2 years, or for that matter, any and every hospital name largely. But Apollo Hospitals being the largest of the lot. And Amrish, I guess with the hospital names, it's not about whether you should have them in your portfolio. It's really about the valuation and the well-discovered story that they've turned out to be. What if someone wants to take fresh exposure? What should they be doing?
I mean, if you want to improve the health of your portfolio, I think you should surely have hospital stocks in your portfolio. I mean, look at the way most of them, I think nearly all of them have performed, especially in the last 3-4 years. So, I mean, other than Apollo, I would surely say you should have something like a Narayana Hrudayalaya in your portfolio, because here also I see at least over the next 1 to 2 years should get at least about 20-22% sort of a CAGR.
Interesting. Okay. You know, within the Nifty, again, if I go back there and try and see who the top losers are, Adani Enterprises has slipped now nearly 3% in trade. Trent is down 1.6, so is a Tata Motors PV. You know, Amrish, what's the story in a Tata Motors PV? Would you stay away at this point from that play altogether? Because there's just so much headwind to that story at this point.
And because of which we have also seen the stock correcting. I mean, especially, we had seen it correcting. Even like the merged entity, and after the demerger also, we have seen a decent correction. So from these levels, I don't see too much of a downside. Yes, it could test one's patience, but between levels of say about 325 to the current levels, one should be buying slowly at every dip.
Okay, that's the take coming in right now on what's happening in Tata Motors PV, of course. But Kunal, let's get in a check from you on Apollo Hospitals and the likes, and whether you see even a time-wise consolidation, if at all.
No, I think the stock has already gone through a decent correction in the last 1 month. I think broadly from 8,000 to now 7,300. So it's a good 10% correction for Apollo Hospital in the last 1 month. It seems to be now coming back into a retest of the previous supports, a rather mild break towards the previous supports of 7,380 for the stock on the weekly chart. So we'll just wait out for another couple of days. If the stock confirms a break below the 7,380 mark on weekly closing basis, then I think we could be looking at the stock going into a further downtrend.
Okay. Nuvoco Vistas is one stock which has fallen sharply from the day's high. Rudra, do you have a quick view on that one?
Sorry, I don't track that, and charts doesn't indicate to me anything on that, so I will definitely give a skip.
Okay, and restaurant brands, Rudra, do you have a view on that one?
No, in fact, I don't track that sector closely, nor any stocks from that matter. So if you want to specifically read into the chart of restaurant brand, yes, strong support is there at around 60 rupees level. So at current market price, if you are buying, look at targets of 70, 72, but keep a strict stop loss of 60 for this long call.
Again, something which has fallen sharply from the day's highs. But we're 2 minutes from close, and you know, let's see how we're wrapping up in terms of the index today. A third of a percent lower on the Nifty 50 index. In terms of the big losers, it's Adani Enterprises, the top loser on the Nifty today. You're also seeing some other losers coming through. Tata Motors, Trent. But let's take it across to Snehi, who's standing by with regard to how the day has gone by. Snehi.
Well, absolutely. You know, Harsh, largely we were range bound throughout the day, but in the last 1 hour or so, we've seen a sharp cut coming in on the Nifty, ending lower by about 0.4% and below the 25,900 mark. So yes, this expiry, monthly Nifty expiry has been slightly painful for us. A 0.4% cut on the Sensex. The broader markets are also in the red. The advance decline ratio, very even, Steven, very nominally in the favor of the advances. The India VIX has seen a further cool off today, so that was something positive to see. A 6.5% cool off on the India VIX. 8% lower now. Okay, that's slightly volatile, but you have names like BEL, Hindalco, Shriram Finance, SBI that were the top Nifty gainers. On the flip side, Adani Enterprises, Trent, Tata Motors, PV and Infosys were your top Nifty losers. Sectorally, it was the day of the real estate stocks that were under pressure today. Anand Raj did very well. On the flip side, IT, that was the top sectoral gainer yesterday, was under pressure, and you had names like LTI Mindtree, Infosys, OFSS, TCS that were under pressure. From the broad of the market, HEG Limited, Craftsman Auto, Century Plyboard, Transformers and Rectifiers on the back of an order win, Spandana Spurti on the back of management change, all of them were in focus. On the flip side, you had Yatra Online, that stock saw deep cuts on the back of the CEO resignation coming in, and some other stocks like ITI Limited, Honeywell Automation and Rights were some of the stocks that were deeply under pressure. On that note, we have wrapped up the Nifty expiry, the monthly Nifty expiry today with cuts of about 0.4%, 25,860, barely holding on to that 25,850 mark. That's how we've shut shop for the day. Back to you.
Right, okay, that's that on the Nifty. Pretty range-bound a session. Kunal, how would you summarize what has happened today and what lies ahead tomorrow then?
Yeah, I think third consecutive day in terms of the Nifty seeing selling pressure, and we've retraced, I think, around 400 points broadly from 26,200 thereabouts to now 25,850, 860 on the Nifty spot. So there is some bit of pressure which is emerging at higher levels for the indices. But then strangely, I think, the larger cap names, sector themes have been doing reasonably well. It's just pressure from few select large cap stocks like HDFC Bank, ICICI Bank, etc., which is leading to such kind of a price action for the indices. So we need to see whether this could be a near-term trend or not. The only good part of the markets today, which we were discussing earlier, is that the market breadth was slightly positive, or at least in favor of advances by a thin margin. So maybe if that could be a trigger point for the index, that maybe a start of the December series could be at a point where the market breadth starts to look a little bit more attractive. That's where I would believe the index settles down pretty quickly.
Okay. HDFC and ICICI are contributing negative 50 points on the index today, combined.
Yeah, so I guess that's what explains the kind of Nifty that we had at our hands. But on that note, we're going to wind it up right here in this edition of Closing Trades. Kunal, we'll see you again tomorrow. And it's a goodbye from Harsh and me.